Good morning, my predicted trades family. Hope everybody's doing well. We got a little bit of a gap down now overnight, which has engulfed yesterday's action, which is interesting, but in fact, I kind of think it's a gift because, many times for FOMC days, we just end up chopping in a range, right? Now we've kind of opened up the door a little bit so that we can have a decent push to get back into range before FOMC data drops. So, could be a little gift for us today. Obviously, with a downtrend, we want to let it settle before we try and go long. But we are at some nice key levels. But before we dig into what the day could hold for us, let's take a quick look at what we did yesterday. Yesterday, ES, had an overnight range. And as we love to teach, you kind of play that range until the range breaks, right? So we pop up early and start to reject the top of that range, which set up some nice shorts down into our squeeze clouds. Excuse me. We held those squeeze clouds and pushed off from them through the top of that overnight range in that 4,300. And we made it up to the daily 200. You can see that yesterday that daily 200 fell pretty much right in the middle of some key levels I had on ES. 43.1875, 43.27.5. And oh, wait, would you look at that? What's the high of yesterday? Perfectly that key level that we've been tracking for months. I love it when things work out that perfectly. So we hit our key level and reject and start to lose the daily 100. As I love to teach, when we hit or get near a key level, especially when we have something like a daily moving average, it can set up a great opportunity in a small zone that can tell us a lot. You get above that daily 100, you hit that key level, and the second you start to lose that moving average, what you just fought above, it sets up a great reversal. And as we all saw, we got that big reaction off of hitting that daily 100 straight back down, slipped a little below 4,300, but ultimately held and closed above. Let's see. So, set up. We had a nice short, we had a great long, we got another great short, then we let it settle for the day. We can take a quick look at our Beast tool just to show how well it worked with that. Come on. So, as we look at yesterday, come on. There we go. As we look at yesterday, we rejected right before our burger top, basically our sell zone of an open range. Reject there, slip down to our burger bottom, or buy zone for the open range. We slipped a little below that, but just to tag our purple shaded level, which might be a little hard to see because that red low of day is right on top of it. But basically, this purple has a line that goes halfway in between our outer shaded region and our opening range shaded region. We have that same purple line down below. and can be a great target and bounce point. So that's what we got yesterday, bounced right at it, had a little pullback to our buy zone so that we could all load in, which we did, and rode it on up to our outer shaded region. The midline of that outer shaded region, was just above the daily 100. Just adding some more confluence because we can see reversals at that outer shaded region. So, Beast was our Beast system. Our levels were a great roadmap, as they are every day. Today, we're already arriving down at our outer shaded region, at our mustard line, as folks have dubbed it. So we can kind of reverse from here. Wouldn't be surprised if we slipped and hit that 4260, because that's a big key level, before bouncing back up. Let's turn off the Beast tool real quick as we continue through what we can get today. So, for today, we are pulling down to the bottom of a 2-hour squeeze. Yep, 2-hour squeeze. As we can see, that is the only squeeze intact right now on ES. If you're new to predicted trades, we have a nice little watch list that we provide to our members in our tool pack that shows us a breakdown of all the squeezes, 30-minute, 1-hour, 2-hour, 4-hour, daily, so that we know what's presently in place and what can provide support, resistance, etc. So, pulling down to this 2-hour squeeze bottom. Let's see if once we open, we can continue to hold this 4273 key level. If we can hold this daily Keltner, the second Keltner, making a nice little pocket of liquidity and support here, we could start to slip that to get to 4260 and bounce back up before taking off, but ultimately looking for these to hold. If we start to lose 4260, then we will likely come right down to the daily 8 and this 4232, making a nice zone to provide support. If we can hold one of these key levels and get going back up through yesterday's low, and about that 4280, right? If we can start getting back above that, we can push nicely back to where VWAP currently sits at that late day pullback low, right? And get back to 4300 and back to that 2-hour squeeze top where that daily 100 sits. I have to expect that we finally arrived at the daily 200. We got our rejection, which we should always be ready for. Usually the first reaction is a rejection. But I would kind of expect that we get back up to tap it again or test it a couple of times before an actual rejection sell-off kind of starts. Let's take a quick look at our 4-hour structure with our MAs. Yeah, perfect, yeah. So as you can see, we are arriving at the 4-hour 21. I like to keep an eye on the 8, 21, 45 moving averages to keep an eye, to get a feel for trend and continuation of trend. So we have pulled down to the 21, which sits right at our key level, this 4273. I love it when these things overlap each other and align. that 21 aligns perfectly with that 42.73 now, and you can see we're holding it and trying to bounce. We do have the 45, which is kind of the extent of the MAs and a trend, sitting perfectly at that 42.32. Again, another overlap. The way that this can go with moving averages, let's take a look right here. As you can see, we can get to testing the 21. We can slip down below it to the 45 and catch a bounce. Same thing here. We slip below the 21. We make it to the 45. We catch another bounce. So now we're at a point where we can hold this 21, catch a bounce, and move back up to test 4,300 and these highs. If we start to lose this key level, this 42.73, we can vacuum down to the 45. A vacuum just means we're starting to break that MA. It should be support, but it's not. So sellers can pile in to push it down to the next MA. So basically, if we start to lose this 42.73, we can vacuum down to 32. We do have 42.60 sitting there as a key level, which could provide a bounce before we get there. Basically a wick, just like this wick, right? Where we can wick below it, but we close above it, we can still keep pushing. So we pretty much got our roadmap for the day. Let's see if this 73 can hold. Maybe a wick to that 60 and then pushing off of 73. But ultimately, if we get below 73 and keep rejecting it, then we can set up down, or we can vacuum down to that 42.32, and we'd also be tagging the daily 8 on the way. If we can hold up here, start to push through those lows from yesterday. Yeah, basically call it 42.80, 42.91. Then we can make that journey back to 4,300 and back to this daily 100. I'm sorry, daily 200 moving average. All right, let's move on to NQ. NQ, we have some very similar levels. Trying to hold this 531 pre-market at the bottom of the squeeze. Excuse me, sorry. We have a key level just below that at this 462, which has the daily 8 right below it, daily 8 moving average. Should we start to give that out, we have these key levels, which provided our last bounce point. And that first Keltner. So that first daily Keltner up from the mean, sitting at that 360. So that we have some targets to the downside if we start to break down. That daily 21 just got above 13,000. And we do have POC pretty close to this daily 15 at 13,290 and some change. So, POC sits down by this daily 15. Ooh, and on ES, POC stepped up to 41.54. I'm sorry, let's take a quick look at that. 41.54. Okay, yeah, so it's back in the middle of all this consolidation. Daily 21, just below it. Just targets to keep a look at in case we start to see some negative reaction to FOMC numbers. Back to NQ. So an NQ POC sitting down with the daily 15, the daily 21 past that, near that 13,000. But if we can hold up at this 531 or catch a bounce at this 462 and that daily 8 and get back above 531, looking for us to fight back up to this 2-hour squeeze top, yesterday's high, and the target past that 13,850. And now our third Keltner up sits and makes a nice zone with that daily 200, that psych level 14,000, and a key level of 975. So overall, if we see a positive reaction on FOMC, we start to take out yesterday's high and start zooming. This is the overall target that we're looking at above. Let's move on to the ready. With the rest of the indices, the ready slipping down near yesterday's lows, actually holding yesterday's lows pretty well. Let's just go ahead and slap a little marker on that just for fun. So let's see if that 2003 can hold the psych level of 2000. We've got Monday's low at around 1995. Also the weekly low, right? So we've got a nice level of support here. Psych level of 2000. We've got a daily Keltner. We've got the weekly low. And we were already trying to hold yesterday's low. So let's see. The ready can be kind of an early indicator for the rest of the indices. It can tend to react a little ahead because there are so many stocks in it. So let's see if the ready can continue to hold 2000, 2003, yesterday's low, get above this daily 200 and push off of it. We can start to see it get back and recover. 220 on the way to 240 through yesterday's high and this 2-hour squeeze top. You know, if we have a favorable reaction, basically looking 2050 to 2075 to get to those levels. If we have a negative reaction and we start to break down, we have the daily 8 at 1985. We have the daily 21 down at 1920. And we have POC still sitting actually down at 1910. So overall target to the downside if we have a very negative reaction. Looking for a reversion to the mean. Maybe not necessarily today, but this week. But we can always have a good positive reaction and just keep on trucking. On YM. One thing I do want to point out, and I should have on each index. Come on. I definitely put toss to work. That's why we get these little laggy moments. But I would suggest on each index that we mark the level that we bounced at yesterday. It's a very key level. And you might say, well, why don't you already have it marked? What I'd like to show, if we go back, and I'm just going to do it on YM to show you guys, but if you go check each index, the same thing happened on that pullback and that daily 200 rejection yesterday. April, where are we? There we go. So when we had that pullback yesterday, we ran into some highs in April. Back around, you know, April 25th, April 28th, and even in May here, you can see we would hit a wall, hit a wall, hit a wall, right at around this key level. And if we zoom in on, yesterday, that pullback came and hit that key level from those April highs. We've slipped below it now, overnight, right? But I would not be surprised for us to fight back up to test, get above, and push off of that key level. So basically on each index, I would go mark where that late day pullback landed. So as we look at today, we don't have really any squeezes intact. It looks like we had an hourly that's kind of starting to fire already. But basically on YM, let's see if these lows from that pullback can hold and start to send us back up. If not, we'll slip down to this daily 200 for a test. And this consolidation that we had, this, you know, little box right here. So we could slip down to that daily 200, settle, and catch a bounce right back up to test this key level. If we can get through it, then it's up to try to get to yesterday's high and that third Keltner up. If we can get back above this level, back above 34,000, start to push through yesterday's high, which was about 250. If you remember from prep yesterday, I said if YM can get going, looking to get to that 250, we got to 246, right? So if we can get going, back above 34,000, work our way back up to that 250, we can keep pressing. Let's see, we closed around that 34,100. We've got a 400 point ATR. So yeah, we can push as high as 34,500 today, easy. If we have a good reaction. If we have a negative reaction, YM, POC back at 32,760. Eesh. All right, so POC is still sitting down at the daily 21. Back down near this 32,900, 800 range. So if we start to see a negative reaction, we're going to start cascading down through these moving averages. We have the daily 8 around that 33,500, daily 15, 32,100. Psych level of 33,000. Obviously that would be a huge drop, and I'm not necessarily saying that all happens today, but if we have a negative reaction, it could start a new trend to get us back to that ultimate goal of a mean reversion. So let's see if we can hold that daily 100 on YM. That will be very big, very key for can we see a bounce into FOMC and then potential continuation higher. Apple. And you know, I'm not trying to be a perma bull, but we are in a very strong uptrend. We have hit third Keltner and we just keep pushing on most names. I don't want to be the first person to start shorting back to the mean, but I want to have the signs to know when we drop below something, when we reject. It's just setting up those signs for a reversion to the mean. Oh, sorry guys, fall is setting in my area, and so you start getting that chill overnight, you get that cough, bleh. Apple, fought up above our key zone here, 171, 172. You can see we slipped down to it yesterday and caught a nice bounce each time. Set a new high overnight, 174. And now we've got a nice squeeze intact. Already started to bounce at that 172.11. So let's see if that can continue to hold. I can see us slip down into this cloud enough to test some of yesterday's lows, but ultimately looking for those all to hold and send us back up through yesterday's action. If we can get above 173 and some change, call it 173.5, we can start to see a nice pump up to that 174 with the goal of getting that 175. If we start to reject, if we slip down to this squeeze cloud and start to reject 172.11, start to take out 171.31, then it'll be a slip back to 170, where the daily 8 and that second Keltner should be stepping up to support. We do have POC still at 165, where that daily 15 has now caught up to. AMD. I see we have some bots in the chat. Let me report them real quick. This is the new fun of getting a few more eyes on us on YouTube. Now we get more of these spam bots. There we go. AMD, not been the strongest the last few days, just kind of going sideways at this key 100 level and at our zone here at 98, 99, 25. Starting to slip down into that zone, but we do have some squeezes in, right at that level. We have the daily 15 right there as well. So let's see if AMD can continue to stay above 98. If it slips down, looking for 98 to hold and get it to bounce back up on a journey to go back to test 100 and get back in the middle of this consolidation. If we start to lose 98, we do have the daily 21 sitting right down near 95. But we do have POC up above at 100. So let's see if we can find our feet. Let's see if it wants to dip down to this 98 and tap that daily 15 before running back to POC at 100. Amazon slipped down near the previous day's lows at 142 and caught a nice bounce, racing up to 146.5. A number of folks in the room yesterday hit those 145s, which aligned with that daily 200. As we gap down, still looking for that 142 to hold. And we do have the bottom of a little, probably 1 hour squeeze there. Yep. We have a little support at 142.5 as well. So basically looking for that to hold and start to send us higher. Not saying we have to get down there because we're already starting to bounce. We could easily just hold our current overnight low, but you can see we just started slipping back to retest that. So we'll see if before open we're slipping a little more. But looking for that 142, 142.5 to hold. bounce us back up through 144 on our way to that daily 200. Finally getting to that daily 200, just like I said on ES. I'm kind of expecting another test before a full rejection and rollover. So if we can get going to the upside, get through that 144, hit that daily 200 at 145, with the goal of getting back to yesterday's high and maybe through it to that next Keltner up at 148.5. If we start to lose 142, definitely coming down to 140 for a test. If we start to lose 140, we've got the daily 15 at 138-ish, and the daily 21 will be around 135. Looks like POC's 142.7, so we're basically right near POC. So that could provide support as well to bounce us up. BA had a nice bounce yesterday. Getting above 170, up to 174 almost, on the top of a daily squeeze. Now that we are back down here, looking for 170 to hold. And bounce us back up to test these highs. And this third Keltner on top of the squeeze up at 173. We start to lose 170, likely coming down to 168, the bottom of the squeeze where the daily 8 sits. And if we start to lose that, we can get down to 165 where that daily 15 sits, or 160, yeah, and POC is sitting down there as well with that daily 15. Old kitty cat. Cat, had a nice move off of that 193.8 level yesterday. Basically, popped, held its open level and just kept on trucking up to 198. Ultimate goal to get back to 200 and above it. We do have that third Keltner and that daily 200 sitting up at 204, making a nice target and magnet for us to fight up to. But if we start to slip and lose 195, likely coming back to that 193.8 for a test, that daily 8 probably going to be opening right at that key level. So if we do start to slip below that 95, I want to see that 93 hold. But if that starts to give out, then we're likely coming right back to this 189.5 where all of the other moving averages are sitting. We do have POC at 196. 196.83. So we're opening just a hair under POC. Let's see if that can be a magnet that drags us up and propels us further to 200. Google a little weaker, gapping below yesterday's lows. So definitely want to be a little more cautious on Google. It's right near its daily 8 and that Keltner, which are probably going to be stepping up right into this 120 level. If Google can settle and hold 120, it can start the journey back to 122, which has kind of been resistance. If we can push through that and yesterday's high, looking to get up to this 123, 123.5, where this third Keltner sits. I'm sorry, second Keltner. Third Keltner is still above at 126. If we start to lose 120, we can slip back to that 118 where the daily 15 sits and where POC sits. So we've got magnets to the downside, magnets to the upside. Let's see what we get. Let's see if these squeeze clouds can hold us in this 120. And the daily 8 might just give that a kiss before heading back up. GS, after a nice push, starting to consolidate. And obviously I'd say this 350, very key. Looking for 350 to hold, bottom of this 2-hour squeeze. If we start to lose and reject 250, the daily 8 is actually going to be right there as well. So if we start to lose that 350 and that daily 8, we can move down to this daily 200 at 344. And pockets down at 334 with that daily 21 if we start to lose that daily 200. JPM on a steady trek, actually has had some decent days and decent pushes. Let's see, looking for 121.5 to 122 to hold if we do slip a little bit. We do have a trend line right there as well. So we could slip down to trend line to catch a bounce to get through 124, ultimately to get to that third Keltner and 125, which used to be an old POC. If we start to lose that 122, we've got the daily 8 and that first Keltner sitting around 120. We also have POC down at 115, right where all these other moving averages, the 21 and the 50, sit. Meta. Meta just consolidating. The daily 8 is catching up and we'll be sitting at the bottom of this squeeze. So let's see if the daily 8 and this squeeze bottom can hold, start to send Meta back up through 178 to 180 with the goal of getting back to this 183, 184 high. Top of these squeezes around 182. Should we start to lose this squeeze bottom in daily 8, we've got the 21 and 15 sitting from 172 to 170. But on Meta, we do have POC at 180. So POC sitting above. If we can at least base, we've got a nice magnet back to POC, and that can turn into a cannon to send us higher. Microsoft. Microsoft slipping down to 290, 289. That daily 8 likely going to be stepping up right there as well. So let's see if these squeeze bottoms in that daily 8 can hold us, give us support, and send us back up through 291, 93, in an effort to get to that daily 200 at 294 and some change. If we can push past that, 297.5, where that third Keltner sits, on the way to 300 is the target. Netflix. Interesting little candle there after close. And then right back down. I'm wondering if they had some news or something, but I'm not going to go look for it now. Let's see, the daily 8 stepping up into these squeeze bottoms around 142. Let's see if 142 can hold. I'm sorry, 242. Let's see if 242 can hold where that daily 8 will be, right at the bottom of these squeezes. 240 maybe on a wick down. If we start to lose that, we've got the daily 15 at 235-ish. The daily 21 going to be stepping up near 230. And we have POC at 226. So POC is sitting down with the daily 21 as targets to the downside. But if Netflix can hold at 242, looking for it to fight its way back up to 250 and to push past it to that third Keltner and this high around 255. Nvidia. Kind of like AMD, you know. Well, a little bit stronger than AMD, right? But NVIDIA has fought back to where it sold off from that pre-earnings early release, right? And we rejected. So let's see if we can hold the daily 8, daily 15, which are stepping up to the squeeze bottom. Could provide some nice support to get to get NVIDIA to start to work its way back up above 188 in an effort to get back above 190, 192, where that sell-off started, right? If we can actually push through that around 192, then the goal is to get to 196, where this daily squeeze and that second Keltner sit. And if we can get past that, psych level 200 and 205, where the third Keltner sits. QQQ. As you can see, we caught a nice bounce at that daily Keltner yesterday. And push back up to a new highs on this drive. We've already wicked a hair below that low from yesterday. But ultimately, let's see, you could even draw. Of course, this will take a second. You could draw a little level of support. Connecting this low. We'll just park it there. So on QQQ, let's see if this little zone around 329 can hold and start to bounce us during the cash session. If we can get through that pullback bounce point at around 330.5, we can keep trucking on up to try to get back to yesterday's high around this 334, top of the squeeze. And if we can push past that, get a good reaction on FOMC, we've got that third Keltner, which will be stepping around 337.5. If we start to lose this zone, that daily 8 will also actually be stepping up right near this zone, probably around 328. But if we start to lose those, we can slip back to about 325, where that first Keltner will be sitting. We've got the 15 below that, the 21 back at this key zone around 318. And we've got POC at 322.9, so basically around this first Keltner. So if we do start to break down in the market, we could magnet down to POC. We could even accelerate through POC down to the 21 at our zone at 318. Roku, again, not a real interest. I mean, it did have a big dump and then bounced off the daily 15 and had a nice pop back, but it's still in the same range. So not a huge interest in Roku. You've got your squeeze, your daily 50 above, sitting at the daily 21. Probably just going to stay in this range unless market has a big rip or a big drop. Shop, not a lot of interest, right? We had this big old reaction, and then we're just fading back. We are at the daily 21, at the bottom of this squeeze. So the longer we sit here and hold, we can get a nice pop back up above 40. But again, not loving this setup. Just going to move on. Morning D-Force, morning Steve, morning Bob. Let's see, snow, not a big interest. I think it got a downgrade. It got its reversion to the mean and bounced. Probably going to come back and retest that mean. Not a big interest here. We'll move on to SPX. So SPX has continued to truck along. Going to be dealing with a little bit of a gap down. What are we near 74? So yeah, going to be gapping down near this 4270, 4275. Definitely want to watch this low around 4260. Just like on ES, we could slip down to tap that to catch a bounce. But with a decent gap down, as long as 4260 can hold, we can try to push back to fill that gap, get back above 4300, and get to that daily 200, which we tapped at the highs yesterday. I love it that as ES tapped that key level, SPX was pretty much tapping that daily 200, just to add confluence to that rejection. We will be gapping below this uptrend line. So let's see if 4260 can hold, get us to bounce back up to 4300. If that starts to give out, that 4260, we can slip right down to this 4234. That daily 8 will be stepping up near there. And we do have a gap just below that, 4225 down to 4208-ish. So if we can't hold 4260, likely going to get down to this gap and maybe even fill it. On SPY. And yeah, just like Richie said, Steve, this gap down might not even be on any news or anything necessarily. Just kind of setting us with some more room to play to the upside today. Into Fed. So on SPY, just like we saw on ES and Q, coming down to a key level, trying to hold that at the bottom of the squeeze. Definitely keep an eye on this pre-market low, which over... Gosh, come on, quit freezing on me. Well, keep an eye on that low. You can see it was a bounce point back here on Monday. You can see we tried to wick, or we pretty much wicked it pre-market. So looking for that 425 to hold. Now we're cooking. I'm actually going to draw a little zone there for fun. And I know you're probably thinking, with such a tiny zone, why even draw it? It just makes it easier to keep that visual when we're down on a 1 minute. So let's see if that little low from that Monday pullback and the pre-market low can hold us around that 425.5 if we do have a little dip. But ultimately, if we catch a bounce there and if we can push off of 426.36 here, basically looking for it to get back to that 428 above, which was kind of resistance on Monday. And if we can push past that 430 and the top of this squeeze and that daily 200, which now overlaps our 431.5. Past that, nothing really key but the 434, I can remember that being a key number from the past, so even though I don't have it marked on this drawing set. If we start to break down and lose this zone, that daily 8, going to be stepping up right at this next key zone. So that would be my first target to the downside, this 423. I'm sorry, yeah, this 423 area. Man, come on. Should that zone and that daily 8 give out back to 420 and the lows of this consolidation. And surprisingly, we do still have POC way down at 414. Very key level. And that daily 21, it's going to be kind of close to it. Probably around 413. So POC the 21 and a key level 414 all sitting below as a target if we break down. And I'm not saying we necessarily get there today, right? I'm not saying that we're going to drop 12 points today. But if we do have a negative reaction start to break down, that would be the overall goal, to get back and settle before heading higher again. Let's just skip straight to Tesla. Tesla provided a great short yesterday, and then it just kind of sat. Did not fight up and set new highs with the market. Just kind of sat in this range. It did break down with the market, but it didn't really run with the market. We have, this Friday is the last expiration before the split. Let's see if Tesla can continue to hold this daily 200, which is now around 908. Held it on yesterday's lows, held it in the overnight lows. So looking for that to hold to start to send us back up through 918, 930, 944. But if we start to lose that daily 200 and that 908, likely coming down to 900, where the daily 8 will be sitting, should we lose that, likely coming down to test that daily 15. And if we just continue to cascade through all those, then it's back to this 865, where the daily 21 will be kind of close to, around 860. We do have POC up above at 925, so a lot of volume got exchanged up here. So it could be a nice magnet if we can hold this 910, 908, push through 918, get back to pocket 925, key level 930, top of squeeze. And if we have a good reaction and keep trucking, got a key level around 965 on our journey to that third Keltner around 980 on the way to 1000. And finally VIX. Yesterday on VIX, I talked about if we're going to see continuation, we need to reject and stay below this daily 8, this 20.5, work our way back below 20, and in a goal to finish filling this gap, right? We had this big gap up in VIX. It brought itself back down, but did not completely fill that gap. So I had that marked yesterday. And we did get down and filled that gap. But as we have seen many times, once you fill a gap, you can get a reversal. So it added a little confluence to that short and that 200 rejection on ES. When we saw that we got to fill this gap, but then started breaking back into it. But it all happened kind of fast. Overall, gapping back up through yesterday's high. So again, if we're going to hold our squeeze bottoms and start bouncing back up, on the market, if we're going to hold our squeeze bottoms and start bouncing back up through yesterday's range, then it's kind of the same as yesterday on VIX, looking to stay below 20.5, below the squeeze top. Start to work our way back down to 20, 19.5, with the ultimate goal of getting to 19 in the bottom of these squeezes. Looks like we've got a 4-hour and a daily. And that's if we're going to see some good upside and hold those squeeze bottoms. But if we're going to break down and start to lose those squeeze bottoms, those key levels, then we're probably going to see VIX get above 2050, maybe come back and test it, but push off of it to get to 21, which is the top of this 4-hour squeeze. 21.2, where that daily 15 sits. And if we really roll over, we got the 21, the daily 21, up near that 21.8, 22. So if we're going to roll over, going to fire the squeeze up, work our way up to 21, 21.5, 22. But if we're going to bounce at our squeeze bottoms, we're going to see VIX roll right back over to fill this gap up, get back below 20, back below 19.5. And that's it. Hopefully this was helpful for everybody. We'll see you in the chat. Thanks for tuning in. If you're new to predicted trades and this is your first prep you've turned into, definitely come check us out. You can find a link to our website in the description of this video. A link to our Discord is also on the website so that you can join our Discord for free, start to learn our system before you sign up for a subscription. Good luck today, everybody, and we'll see you in chat.